awesome topic today, which is decoding the American dream. So if you're joining me today, you're welcome. You're welcome. Please um kindly share this video, like, subscribe, and let's get started and see how we can demystify, you know, what the pain points are in decoding the American dream. Like I said, welcome to my YouTube channel. My name is Helen Orejobi. If you're joining me, that's awesome, right? So I'm going to be sharing my perspective where we dive deep into the meaning, challenges, and aspirations tied to the quintessential American idea, right? So join me as we explore the complexity of the American dream through the personal stories, societal trends, and thought-provoking questions, right? From historical roots to its modern day manifestation. Well, we're going to be uncovering what the American dream truly means and how it shapes our life. So grab a seat, grab a pen, grab a paper. If you want to grab a drink, do that. I got my glass of water or my water here. So, hey, let's get this and get ready to decode the American dream from this perspective of a fresh, um, mindset or from a fresh eye. So let's quickly do that. Now, what are the two pain points, of your American dream, right? What are the two pain points? Number one pain point is, hey, student loan debt. These are up the chain. I just graduated from my master's. I know what that figure looks like. I know what that figure looks like. Now, guess what? Housing affordability is also another pain point. Now, in pursuit of the American dream, many individuals encounter significant hurdles that impede their path to financial stability and prosperity, right? Two prominent pain points that plagues Americans striving for their ideal, financial, goal or whatever that is. Now, number one, student debt dilemma or student loans or whatever you want to call it. This burden, right, is something very, very, it's a norm in most homes, right? Because like say 8 out of 10 is owing student loan, right? Most people don't get paid up until they pass on. So the burden of student debt has reached staggering level in the United States, leaving millions of graduates grappling with financial strains even as they embark on their careers, right? The rising cost of higher education coupled with unnecessary, or let me say necessary, the necessity for many to rely on loans to fund their studies. You see why I said it's unnecessary? Because guess what? A lot of people go to school, they spend thousands of dollars, and then they come back working a job that is not even giving them up to six figures. Some people earn $30,000, $40,000 a year, right? That is way, way lower than what the cost was for them to go to school in the first place. And then guess what? Because they don't pay up this student loan, they end up owing a huge amount of money, right? So studies has created a significant barrier to achieving economic mobility, right? Now, graduates often find themselves saddled with immense debt obligations that can take years, right? If not decades to repay, right? This burden is not only affecting individuals' finances, right? It's not affecting their well-being, but it also hampers, bordering economic growth as it limits individuals' ability to invest, to save, and contribute to economic, in meaningful ways, contribute to your family, contribute to the economy as a whole, right? So number two pain point is the housing affordability crisis. The dream of home ownership, a cornerstone of American dream, has become increasingly elusive for many due to the housing affordability crisis, right? Skyrocketing housing prices coupled with stagnant wages in many areas have created a situation where owning a home is out of reach for a significant portion of the population, right? You see rentals too they're facing challenges right now, right? As rental cost has continued to outpace income growth, right? So your wages are not increasing, your income is not increasing, but your cost of living is increasing because everywhere around the world, cost of living has gone up. Food, shelter, clothing, everything is on the high, right? Making it difficult to save for a down payment or afford stable housing. This crisis not only impacts individuals, right? And families seeking, shelter, but also has a broader societal implications, right? Including, like if you're trying to, build wealth inequality, the gap is really, really high or large right now, and diminishing overall economic stability. So addressing these pain points requires innovative solutions and strategic financial planning, leveraging tools such as permanent life insurance, including index universal life, right? The IUL. I'm always going to be preaching on this, and whole life policies can offer avenues for individuals to navigate these challenges effectively. Now, so guess what? By incorporating these financial instruments into comprehensive financial plans, individuals can take, proactive steps towards alleviating student debt burdens. You want to make sure that that burden is not on you anymore. You want to look for ways to alleviate this debt, securing affordable housing options, and ultimately realizing their aspiration of achieving the American dream, right? The American dream can be real, right? So now let's talk on student loan, right? So I'll give you a typical scenario, right? So student loan, let's talk about who we're going to talk about. Let's use Sarah, for instance. So recent college graduate burdened with student loan debt, despite earning a degree and pursuing her passion, right? Sarah finds herself grasping the financial strains of monthly loan payments. The weight of her debt threatens to derail her dream of home ownership, right? Because after going through school, now you have to think of home. You want to make sure that you have your own roof over your head. You want to start jumping on that bandwagon of owning a mortgage, right? Career advancement and financial independence. These are the weights that her debt, weighs on. Typical traditional solution that every normal person would used to address this situation, like Sarah did, right, in the past, was to address the student loan dilemma with options such as income-driven repayment plans, loan consolidation, or refinancing to lower the monthly payments and overall, right, debt burden. But additionally, she can focus on increasing her income through maybe career development opportunities, side hustles, or freelance work to accelerate debt repayments. That could be a possible way, because those are what people teach you. But as a licensed financial professional, right, my recommendation to you would be utilizing life insurance to see how you can pay down this loan or debt fast, right, to avoid those interest rates and all that. Now, using strategies like the term life insurance, if you're married, you have kids, you want to make sure if anything happens to you, your family is not left with that body, right? Index universal life, like I mentioned earlier, and whole life can also play a crucial role in helping to pay off student loans, right? So now these are the different ways it works. Now let me break it down. I'll start with the term life insurance, right? If you have a term life insurance, it provides you coverage for a specific period, specifically ranging from 10 to 30 years. It could be lower than that, right? But typically we're looking at 10 to 30 years. Why it doesn't accumulate cash value like the permanent policies, but guess what? It offers a death benefit that can provide financial protection for your loved ones if you were to pass away during the term of the policy. In the context of student loan that we're talking about right now, if you were to pass away, right, before paying off your student loan or student debts or whatever, the death benefits, right, form of the term life insurance policy could be used by your beneficiaries to settle your outstanding debts, your loans, ensuring that your debt, remember, is your debt, that your debt doesn't become a financial burden to your loved ones after you are long gone. So it's not just you loving them for the now, you have to love them even after you're gone, right? So number two strategy that you will want to use is the Index Universal Life, which is the IUL, right? So utilizing the Index Universal Life, right, combining, it's the features that it gives, it combines the death benefit protection of a traditional life insurance. So I would say maybe go with this one if that's the best option. If it's within your age bracket and it's affordable to you, you want to go with this one, right? Because it also contains that death benefit protection that a traditional life insurance will give you, with the potential for cash value accumulation linked to the performance of the stock market indexes, such as the S&P 500 and other indexes out there, right? The cash value in an IUL policy grows tax deferred and can be accessed through policy loans or withdrawals during your lifetime, right? What that means, you can access those cash while you were still living, while you were still alive, because it has what we call a living benefit. By leveraging the cash value growth potential of IUL policy, right? Now, let me take that back, right? The fact that it has cash value properties, you have to max fund the account, right? So that you can have cash value, not the living aspect. The living benefit part is when anything were to happen to you. If you have a qualifying health situation, maybe like a chronic, critical, or terminal disease, they pay out the living benefit aspect, which is like the death benefits, as you want to call it. Whatever the money is at that time, they pay you if it's a critical condition. Some companies or some providers pay you about 90%. If it's a chronic illness, some companies pay you 24, 25%. If you need to do long-term care, right, they pay you about 2% monthly, right? So the other one, chronic, is annual, 25 to 24% annually. Now, if it's terminal, they pay you out 100%. So let's not get that twisted. But what I'm talking about now, the main focus is you leveraging it as a bank and growing money, which is growing at a compounding rate of return. Now, guess what? By leveraging the cash value growth potential of the IUL policy, you could accumulate funds over time that can be used to pay up your student loan, right? Your policy loan in particular allows you to borrow against the cash value of your IUL policy without triggering taxable income. Right? Without triggering what? Taxable income, providing a tax efficient source of fund to address your student loan. Now, number 3 would be the whole life, right? If you don't like the IUL, you want to opt for the whole life. Now, whole life, insurance covers guaranteed cash value growth and a death benefit that remains in force for your entire lifetime, as long as premiums are paid, right? The cash value in the whole life policy grows steadily over time on a tax-deferred basis, and you have the option to access this cash value through policy loans or withdrawals. Similar to an IUL policy, you can use the accumulated cash value in whole life policy to pay off student loan as well. Additionally, some whole life policies may offer dividends payment, right? Some of them, depend on how it's been structured, right? Which can, further enhance the cash value growth potential of your policy. In summary, right, as a student, if you own student loan, whole life, policy, IUL, index universal life, or the term, right, is your best option, right? It's way better because guess what? It's protecting your life, and also you are actually doing the right thing to make sure that your debt doesn't transfer to someone else, right? So while term life insurance provides debt benefit that can be used to settle outstanding debts, Index Universal Life, the IUL, and whole life insurance offers additional benefit in form of cash value accumulation that can be tapped into, to pay off student loan during your lifetime. Each type of life insurance policy has its unique features and benefits. So it's essential to work with a licensed financial professional like myself and those on my team to see how we can sit with you and design something formidable to ensure that, right, you have a suitable strategy for your individual needs and goal. Now, moving on, let's go to ability, which is the pain number 2. Now, John and Maria, right, the young couple struggling to afford housing in the competitive real estate market, despite working full-time job and saving diligently. We see this every time. This might resonate with you or anybody around you that you might know, right? Now, despite working full-time jobs and living, like striving hard to save diligently, they find themselves priced out of house ownership, right? In their desired neighborhood. It's all about where you desire. What zip code are you looking to move into? What is that desire dream home you want? And where is the location? Right? So you just don't go buying a house because everybody's buying a house. No, you're looking at several factors. If you have kids, you want to go to a better zip code so they can, go to schools in that zip code. So you want to look at these options. Those are all the criteria in which you want to pick your stuff. Now, renting offers little relief as skyrocketing rents eats into their monthly budgets. But guess what? Your typical traditional solution to all this that a regular person might take, or somebody might advise, your friends or family might tell you, they'll tell you, hey, John and Maria, why don't you tackle the housing affordability crisis, right? Right? Why don't you tackle it with alternative housing options such as cooperative housing or shared living arrangement or government assisted programs for their first time home buyer, right? That's a good option, right? They can also prioritize saving for a down payment, right? That's great. That's super great. Now they can explore less expensive neighborhoods. That could be an option. You don't have to start too big. You can start small since it's your first house, buy where your money can afford, and then let's see what happens later. Maybe you can grow funds and move on, right? Now, or consider purchasing a smaller house or condominium to make home ownership more attainable. The question you should ask yourself right now is it buying a house? Is that the goal? Or your goal is to have something that you can afford to pay instead of sitting on a 30-year mortgage that maybe you're buying a house of 250 or 350 right now. In 30 years, that house could amount to, 800 or $1 million. Are you thinking about the costs? But now let me tell you my recommendation as a licensed financial professional, right? I would recommend utilizing a combination of term life insurance, index universal life, and whole life insurance, right? And I recommend you that this can be used, as a strategy to help you pay off your house. My goal, remember, is how you can eliminate debts, how you can save up on money. So instead of sitting on a mortgage for 30 years, I'll show you strategies in which you can pay up your house as early as 6 to 10 years if you're aggressive enough, right? And owning that stuff instead of going and being a lender or a beggar or whatever it is. Now, each type of the insurance serves as a unique purpose in achieving this goal. Now, let's look at how the term life insurance can help, right? So, term life insurance provides coverage, like I said earlier, for a specific period. Benefits or this coverage can, range from 10 years to 30 years. It offers you death benefit to your beneficiary if they insured, maybe you are the insured, if you were to pass away during the term of the policy protection during the mortgage repayment period, right? So that's a good way to see if you're jumping on a mortgage, you want to have life insurance that can actually cover your mortgage, right? So I see a lot of people, somebody said something, if you're in your 20s, you want to know how much coverage you need, just add 0 at the back of your age. So you probably need 200. But by the time you hit 30, you want to add another 0, that's 300. That's the base you should get, right? So if you're going to buy a property of 450, you want to make sure that at least you add 0 to your age, whatever age you are, or if the mortgage is maybe 10% or 20% because of cost of inflation, right? That would be a safe net. But let's go back to what I'm saying. If the insured were to pass away, say you were to pass away prematurely, right? The death benefit from the term policy could be used to pay, to use by your beneficiary. When they pay out to them, your beneficiary can use that to pay off the remaining mortgage, right? The mortgage balance, ensuring that your loved ones can keep the home without the burden of the mortgage. Why do I say so? Because we see a lot of people, a lot of family, especially those that are breadwinners, when they pass on, the family suffer, right? It's double pain. You're crying for your absence and they're crying because of the extra burden, the financial burden that you have placed on them. Now, most people are not fortunate enough. They lose the home. They go to a different neighborhood, different from the one you had planned for them. So the responsible thing for you to do is to get a policy for yourself. If you have a joint mortgage with your spouse, each of you has to have coverage on each other in case one person were to die. You don't want to carry on the next person's burden. You see what I mean? Yes, that's how it is. Now, number 2, let's stick to index universal life and see how we can use this, as a way to avoid paying so much on your mortgage, right? The index universal life, right, offers both the death benefit and potential for cash value accumulation. Like I said, a portion of the premium paid right, into an IUL policy goes towards the cost of insurance, right? A portion of it goes towards the cost of insurance, while the remainder is allocated to a cash value account, which can grow over time based on the performance of selected stock market indexes, right? Now, guess what? The cash value in the IUL policy can be accessed through policy loans or withdrawal, right, which can then be used to supplement mortgage payments, right? Or even pay off the mortgage entirely. Remember, I said that you could pay up your mortgage in 6 to 10 years. I've been able to help thousands of clients save millions of monies on mortgages by utilizing the same strategy. Once I sit with focus on eliminating the biggest debts that you have, right? So if you have a goal, say you're sitting with me, I want an IUL, Firstly, is a life insurance that protects yourself. Now let's look at the possibility of you using it as what it is. Use it to the potential. Let's try to eliminate your debts with this strategy, right? Now, remember, there's tax-free benefit. There are a lot of benefits. It has compound interest in it that your money grows over time. Now, those additional benefits will help you eliminate your debts faster, right? Now, guess what? Additionally, some IUL policies offers a rider or options specifically designed to accelerate your cash value growth for purposes such as mortgage repayment. So these are strategies that I would tell you to do. Now, if somebody sits in front of me and you don't have a home first, and you say, Helen, what should I get first? I would tell you, go for your index universal, go for a permanent life insurance that has cash value. That should be your first stop or your first point of call. And then after getting that, then we can look into you purchasing a home. How about that, right? How about that? So that's good. That's a good one. So if you want to buy a house or you want to get protection, you can, hit the link in the description below and let's sit with you and work on these numbers. It's a numbers game. Let's work on these numbers. Myself and my team, I have a large team. We're eagerly ready to help you. We can jump on that call as short notice as 30 minutes, but it has to be American time. Don't go calling us at midnight, maybe other geographical region. You want to stick to the specific American time zones, right? We can get on you. I have people in Eastern time, Pacific time, and Central time. We can sit with you and work and see how we can set up these strategies for you. Now, lastly, utilizing whole life insurance. Whole life insurance provides lifelong coverage with guaranteed premiums, death benefit, and cash value accumulations. The cash value in a whole life policy grows at a guaranteed rate and can be accessed through policy loans or withdrawal. Similar to an IUL, right? It's the same thing because a permanent life insurance. The cash value in a whole life policy can be used to supplement your mortgage payment or pay off the entire thing. That's the goal, right? Additionally, the whole life policy offers accelerated benefits rider that allows policyholders to assess a portion of the death benefits if they express a qualifying terminal illness, right? Which could potentially be used to pay up your mortgage by strategically combining term life insurance for immediate mortgage protection during the repayment period with index universal life and whole life for long-term, cash value accumulation and flexibility, right? Individuals can create a comprehensive strategy by providing financial protection for their loved ones. It's important to work with a knowledgeable financial professional. It has to be someone licensed and experienced like myself and any member of my team. Like I said, we're ready to sit with you as early as 30 minutes. You send us a DM. If you have my social media platform, or you go straight to the email, contact us, we get a trigger. One person on the team, if I'm not available to do that, we'll jump on that call with you, which is the discovery call, to sit and look at what you have and see how we can specify or tailor that plan to, align with your specific needs, your goal, and your financial circumstances, right? Now, thanks so much for watching. Thank you for being here with me to explore, Decoding the American Dream, right? I shared my perspective as we dive into complexities and, multifaceted concepts. I hope you gain valuable insight and perspective. The American Dream means different things to different people, but guess what? But at the core of it, it embodies the idea of opportunity, prosperity, and upward mobility. Now, guess what? However, right? Achieving this dream is always straightforward, and it often requires resilience, perseverance, and adaptability in the face of challenges. As we continue our journey towards understanding, right, and realizing our American dream, let's remember that it's not just, about individual success, but also about creating a more, you know, equitable and inclusive society where everyone has the opportunity to strive, right? By fostering collaboration, empathy and compassion, we can collectively work towards building the future that we all dream, right, for ourselves and our families. If you found this, discussion thoughtful, you found it thought provoking, if you found it, triggering something in you to start thinking inwards, right? I encourage you to share your own perspective in the comment section below. Let's know what other strategies you can use, right, to ease up this two pain point that we point out today, right? Share your experiences together. Let's continue to have this conversation and strive towards a brighter and more inclusive vision of the American dream for generations to come, right? Don't forget to like, share, subscribe, and turn on your notification button so you can get notified when I post something new, which is usually daily, right? If not, maybe 2 or 3 times a week. Now, thanks for joining me to explore this opportunity or this topic. Remember, right? Keep dreaming and keep pursuing your aspiration with determination and optimism. I need to see you at the top because that's where you belong. Share with your friends, family, post on all social media platforms. Remain